T, good to see how you doing, brother. You're the first one in today. How you been? JP, good to see you, brother. How you doing? Evening. How you been? Davey, good to see you. How you doing? Okay, as you can see, there's still some issues with Restream and X, so we can't pin the live show in any sort of a way. But as always, if you can press the three dots right on top of the screen, share the profile. It's the only thing we can do for the time being until this X and Restream situation is resolved. A green day today, you think this is a bear trap, fake out? Could be, could not be. I'll be very honest, there's two outcomes. Hey, Miles and family, come to good to see you. How you doing? Let me do the intro disclaimer and I'll explain what I mean by could be and could not be. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. long time onwards for the most recent news regarding cryptocurrency, CBDCs, AI politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, we also do Q&As in this live as well, which means if you do have any questions, put it down inside the comment section. More than happy to help you out. This is episode 441 of the CMF Live Show. Now, before we go through on tonight's news, and the first news we're going to be covering is, what's happening right now inside the market space. We're also going to be talking about tonight's live show regarding Coinbase. We're going to talk about the matters of essentially the CFTC. We're going to talk about some stablecoin innovation, some prospective news to go through on tonight's live, some US news to go through, some United Kingdom news to go through as well, all related with cryptocurrencies, the market space, and obviously Ripple news to go through towards the end of the live show. Now, the first news is what's happening so far. Before we go through that, let's go to the comment section first and then straight into the first news. So let's see where we're at. The first question was, is this a fake out by T? So is what's happening inside the market space some sort of a fake out? Is it a bear trap or a bull trap? I'll be very honest, it's two outcomes we decided to play on, which one outcome was from Standard Chartered Bank, which is we could be seeing a $50,000 Bitcoin in a $1,400 Ethereum, and then we can see the market upside. And the second outcome we considered essentially was what JP Morgan's analyst Nicholas said and what BlackRock said, that essentially we're just going to slowly start shifting over to the upside, and the manipulation stage in the market space is pretty much done. We're just going to move forward. So those were the two outcomes, and so far JP Morgan and BlackRock's essentially outcome is playing, to be fairly honest. Hey Miles and family, come with us. Good to see how you're doing. Do you find out what that Bitcoin VM was about? I didn't find out what that Bitcoin VM was about. I'll be honest, I completely forgot. Davey direct messaged me on X so that it comes up as a notification so that I can look into it and just reply back to your DMs. No problem. Greetings, Miles and family. Lena, good to see you. How you doing? Hello, Miles of CMF. Hope you all had a good day. Let's go, Scott. How you doing? Morning, Miles of CMF. Shelly, good to see you. How you doing? Let's go, Scott. Thanks, JP. Share the live. Congratulations on episode 441, Miles. Let's go. Anytime. Now, as previously, there's still some issues going on with Restream and X being able to connect to each other. That's why the live show doesn't come up on a post anymore. But, my head on X essentially is highlighted that I'm live. So CMF members, just like yesterday and the day before, if you can possibly take 2 seconds to click the three buttons at the top of the screen and then click on share the profile, it's the only way to retweet the live show. If you'd all do that, I would appreciate it so much. Now, the first news on tonight's live. Good evening, Miles. Hope you are ready for a lovely weekend. Let's go, Adi. The first news on tonight's live: Bitcoin, Ethereum, little changed. as market essentially holds for US inflation report. As we know, the inflation report is going to be coming out. The cryptocurrency market essentially entered a period of tight consolidation with Bitcoin and Ethereum trading little changed. Over the last 24 hours, according to CoinDesk, traders essentially have moved to the sidelines in anticipation of the upcoming essentially consumer price index, the CPI report, which is expected to provide critical signals regarding essentially the Federal Reserve's next move in its battle against the sticky inflation situation. So here's a market essentially snapshot, you could pretty much say. Bitcoin right now hovering around $68,500 mark, essentially showing a slight recovery with the TradeFi essentially driven dip earlier in the week, but remaining well below its January highs. Ethereum trading essentially steadily near the $2,850 mark as the market balances the excitement of the BlackRock essentially build listing on Uniswap against the broader market uncertainty still playing out. Volatility suppression. Analysts noted that implied volatility has dropped significantly as the market awaits the inflation data. This calm before the storm suggests that any major deviation from expected CPI numbers could trigger a sharp move in either direction. Now, according to the CPI data, the market is actually reacting positive towards the news. That's essentially being released. The upcoming inflation report is essentially seen as a major test for Cathie Woods, also as well, on her thesis that she essentially explained. While Cathie Woods argues that AI is driving essentially structural deflation and the Federal Reserve remains wary of persistent price pressures in the sectors, essentially in the private sectors, which essentially we talked about Cathie Woods yesterday with her theses of, Bitcoin and AI is going to be an amazing thing. And I said, you don't really need to wait 5 to 10 years for AI to catch up to Bitcoin and maybe advanced technology when you could just use the XRP ledger, which is just faster and cheaper. And you don't need to wait 5 to 10 years because XRP Ledger is already a great blockchain for finance. Why wait 5 to 10 years for Bitcoin to catch up? If it catches up. Now, the yield war also that's going on still, the yield war connection. If inflation comes in higher than expected, the Fed may essentially keep interest rates elevated for longer. This would intensify the yield wars at the White House as the gap between stablecoin rewards and traditional bank savings and accounts remains a point of intense, essentially political and economic friction. Institutional hedging reports indicate that while retail traders are essentially waiting for the CPI print, institutional desks at JP Morgan and Goldman Sachs are continuing to accumulate during these flat periods, treating essentially the $67,000 to $69,000 range as a stabilization zone for Bitcoin. So, what is there to watch next inside the market space? The market is bracing essentially for that potential volatility event following the report. As Standard Chartered recently warned, a disappointing macro environment could see a temporary flush out towards $50,000 for Bitcoin. Cohesively, essentially, a lower than expected inflation print could also serve as a catalyst to push Bitcoin towards $75,000 levels, potentially triggering that $2 trillion inflows that BlackRock executives have been saying for the past few days, which I shared on this live show. So, as of Friday afternoon, the consensus remains one of the cautious optimisms, with the industry's eye fixed on Washington's data release to determine the trajectory of the remainder of the quarter one of 2026. Now, the reports that essentially that did come out for the CPI so far, it's been good. It's been good in terms of the market space. The crypto market space is picking up, you could say, very, very slowly. And from rumors or essentially announcements, it's been good so far. Now, moving on essentially from what the market space could go into to Coinbase. So, JP Morgan essentially said that Coinbase stock is not doing too well, so they priced it down. They did say, however, that long-term wise, Coinbase is essentially stock coin is actually going to do exceptionally well in the long-term run. Short-term, it's not going to do too well. So, what happened essentially to Coinbase stock? Did it do well or did it do bad? Well, Coinbase's shares jump as dip buyers bet on crypto market bottom. So, shares of Coinbase Global Inc. Coin saw significant essentially in-trade rallies as institutional and retail dip buyers pulled back into the stock market. According to Bloomberg, the surge suggests that growing investor confidence that the broader cryptocurrency market is carving out a definitive bottom after months of volatility and de-risking. So is this really the bottom that we were expecting so that we could go on the uprise? Well, so far, JP Morgan's analyst Nicholas is still standing by his words that we have reached the bottom and this is now going towards the upside. BlackRock is standing on their words too, that the bottom, that essentially for the remainder of the year, we should be expecting the upside. Even Bloomberg is now jumping on the bandwagon and saying that we should just be going on the upside now. And also, BlackRock essentially was wrong about Coinbase's share not doing too well because the stats prove otherwise. So, key drivers of the coin rally. Earning optimisms. The jump essentially comes on the heels of Coinbase's recent quarter four reportings, which exceeded analyst expectations. Despite lower retail trading volumes, the exchange's subscription and service revenues, driven by institutional custody fees and stablecoin interest income, has become a resilient pillar of its business model. The utility era pivot. Investors are betting on Coinbase's role as a primary on chain interference for Wall Street. With essentially BlackRock listing its build fund on Uniswap and the White House hinting at trillions and waiting capital, Coinbase is positioned as the essential gateway for regulated institutional flows. The zero catalyst, essentially, Coinbase history integration with layer zero blockchain, and its own layer 2 network base are right now being viewed as long term growth engines. These allow essentially Coinbase to capture transaction fees from 24/7 natively on chain, banking essentially futures advocated by Franklin Templeton and Swift. Regulatory essentially tailwinds. While the yield wars right now are still continuing, the market is viewing the $1.5 million fair shake pack, which I essentially revealed yesterday, that essentially is being targeted. One Democratic politician is right now being targeted in a negative way by the crypto space, which I fully understand, because this man AI Green is fully against the crypto space. And it just shows how far crypto has come. That crypto is not only trying to push its way into finance, but also push its way into politics. Market sentiment. The bottom is in, is what the word is going around right now. The bottom is in. Technical support. Analysts noted that Coinbase shares found strong support at their 200-day essentially moving average, triggering a wave of aggressive buying. Contrast to altcoins, while Crypto.com essentially news reported that many speculative altcoins are floundering, Coinbase is benefiting from the flight essentially to quality. Investors are treating Coin as a high beta proxy for entire digital asset ecosystem and structural maturation rather than a bet on individual tokens. If tech stocks are doing good or crypto stocks essentially are doing good, then the crypto market space is doing good, because that's just what happens. Bitcoin doesn't follow gold, it follows essentially tech stocks. Tech stocks do good, Bitcoin does good. We're all on the good side. Institutional accumulation. Reports of Goldman Sachs increasing its crypto-related equity exposures and ARK Invest continued conviction. Retreated by Cathie Woods on February 12, which I explained on February 12, have blustered with the narrative that the current $60,000 to $68,000 Bitcoin range is just a consolidation zone and before a major leg up. So a lot of people, you could say, are now backing the idea that the bottom is in and we're going on the upside. Cathie Woods saying the bottom is in, we're on the upside. Nicholas from JP Morgan as an analyst saying that essentially the bottom is in, we're going on the upside. JP Morgan essentially it's themselves saying it as well. BlackRock saying it as well. Goldman Sachs is saying it essentially. The only person that's saying that we might have one more down before we go up is Standard Chartered Bank. The Bloomberg report underscores a shift in how the market essentially values crypto companies. No longer seen merely as a trading casino, firms like Coinbase are now being valued as critical financial infrastructures. That's brilliant, because crypto was treated like a casino in the past, and it's becoming this mature market space. That's essentially, regulations are coming in as well. As the US CPI essentially report looms, and the industry prepares for the White House Yield Summit next week, the jump in Coinbase shares serves as a leading indicator that the smart money is looking past the short-term macro jitters and positioning itself for the massive $2 trillion institutional unlock expected in the remainder of 2026. Everybody now is talking about the $2 trillion unlock. 1% of the Asian market can boost the crypto space by $2 trillion. Just 1%. Imagine what 2%, 5%, 10%, 20% could do. Just 1% is $2 trillion. And everybody's talking about it. Since BlackRock mentioned it at the Hong Kong Consensus essentially event, everybody's mentioning it now. Moving on from that to crypto groups, essentially countering the Wall Street bankers with pro-innovation and stablecoin principles. Before we talk about that, and essentially before we talk about Wall Street, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the next news. So let's see where we're at. We were, I think, here. Hi, Miles and family. Alex, good to see you. How you doing? Share the live, hit the like button. Let's go, Scott. If anybody, if you can, CMF members, just take 2 seconds because there's still some issues with Restream connecting to X for some reason, and the post doesn't come up. So, CMF members, if you take 2 seconds to click the three buttons at the top of the screen and click share to profile, and that way we can retweet this live show everywhere on X, just like yesterday and the day before. Share the live, hit the like button. Let's go, Scott. Miles, your daily effort and integrity in which you bring is equivalent to the value of XRP. Let's go, Miles and CMF. Let's go, Scott. Thank you so much for the kind words. Good evening, Miles and family. Ian, good to see you. How you doing? Hi, Miles and CMF. Peg, good to see you. How you doing? Lost you on X, mate. So watching here, no problem, Addy. Market is up. Let's go, Ian. Facts. Hi, Miles and CMF. Stormy, good to see you. How you doing? Don't let kids close to. Okay, I mean, this person is just. Good evening, Professor Miles. Funky brother, good to see you. How you doing? Good evening, CMF. Funky brother, good to see you. How you doing? I guess I will catch up from the beginning after the live. Let's go, Funky. 1% will satisfy me, Miles. Let it happen. Let's go, Scott. The catalyst for a downward spiral to 50,000 could be an attack to Iran. Either way, we are nearly there. It's a bounce from the price point or from here. I agree 100% essentially with what Shelley has said. Something needs to always happen for that market space to, go through the jitters, essentially, is what Bloomberg is saying. So, an attack on Iran could be that last bottom we will see inside the crypto market space. The US and Israel attacking the Iranian government, that could be the one that pushes the market down on the shock side and then brings it back up. And that could be the very last time the market goes down. So, I agree with what Shelly's saying. It's an interesting play as well. This sleeper, XLM and HBAR are about to do some things. Let's go, Scott. I just liked and reposted the live. Thank you so much, Funky, for that as well. Now, crypto groups. Counter Wall Street bankers essentially with pro innovation stablecoin principles. The ongoing yield wars that are happening right now between the digital asset industry and the traditional financial essentially sector reached a new legislative peak. According to reports from Coindesk, a coalition of leading crypto advocacy groups has submitted a formal set of stablecoin principles to the Senate leadership designed to counter the restrictive proposals recently lobbied by major Wall Street banks. The core conflict yield and competition. The friction centers essentially on the Clarity Act, the landmark US stablecoin bill. Traditional banks have been lobbying for provisions that will effectively ban stablecoin issuers from offering interest or yield to holders, fearing of essentially mass exodus of deposits from low interest saving accounts into digital dollars. So, here are the crypto coalition's essentially counter proposals. Protection of yields. The crypto group's principles argue that programmable rewards, yields, are a fundamental technological feature of the digital assets. They claim that prohibiting yields would stifle competition and keep American consumers trapped in this adequate banking model. Non-bank issuance. The group are pushing for a pathway that allows non-bank entities like Circle or Tether to issue stablecoins under a federal framework without being forced to become a fully fledged commercial bank. Asset composition transparency. Rather than the strict cash only requirements sought by banks, the crypto groups propose a high quality liquid asset, essentially standard, similar to what BlackRock uses for its build fund, which includes short term treasuries. Interoperability mandates. The principle demand that essentially the bill prevent walled gardens, ensuring that stablecoins can move freely across public blockchains like Ethereum, Solana, and the XRP ledger. So that is essentially what the crypto groups are advocating for right now. They want yields to happen on stablecoins. They want essentially money to be moving free, with no essentially stifleness in between, money to be moving very freely on Solana, Ethereum, the XRP ledger, which I agree with 100%. If you want to beat the competition, if the US wants to be ahead of the game, they want to become the capital of cryptocurrencies, then they are competing on the same playground as the UAE and Hong Kong and Singapore and Japan and the EU, and the list goes on. So if they want to compete and become the capital of cryptocurrencies, then they can't be stifling innovation, because that's what they did in the past when Gary Gensler was in charge. And that didn't really end well for the crypto space, because they all moved out and went to Dubai. So, this move comes just 24 hours after a key Senate Democrat signaled a willingness to move the crypto bill forward, and the SEC chair Gary Gensler warned of a danger of defeat if the agency does not adapt. So, the political stakes essentially are also rising, and that's essentially what's happening inside the crypto space and the political space as well. Now, as I explained yesterday as well, regarding Gate.io's CEO, essentially Lin Han, declaring that the banks have technically lost, it does seem like it. I'll be very honest, because do you know what happened yesterday? After I ended the live show, 2 hours later, there was news that came out that said essentially that the CFTC has essentially created, regarding the advisory group, Brad and essentially Brian Armstrong are a part of the CFTC's advisory group. Do you know what also happened yesterday during the live show, where I revealed to you that essentially the SEC's power in terms of the crypto space is slipping into the hands of the CFTC? And then 2 hours later, the CFTC makes the announcement of Brad and Armstrong are now part of the CFTC advisory board. It does really seem like day by day the banks are just wasting everybody's time, and the power is slipping out of their hands and going into tech companies that are slowly also becoming neobanks, you could pretty much say as well, like companies like Ripple and so on. But that's essentially what is happening. The banks are genuinely wasting their own time and everybody else's time. Just give in. It goes back to that old saying, which I explained yesterday. If you can't beat them, just join them. The crypto companies are winning. They have so much money invested into politics, and now they're on the board of the CFTC, and the CFTC is the one that's going to be carrying all the power inside the crypto space, not the SEC. They're just losing back to back when it comes to the banks. But for some oddly reason, they're still trying to cling on to their, good old days, you could pretty much say. So, moving on from the banks still trying to cling on to the good old days to the US based DeFi advocacy group urges the UK's Financial Conduct Authority to anchor crypto rules to unilateral control. Now, a prominent US based decentralized finance DeFi advocacy group, likely essentially the DeFi Education Fund or similar coalition, submitted a formal response to the UK's Financial Conduct Authority, urging the regulator to refine its approach to crypto oversight. According to Coindesk, the group is calling for the UK's upcoming regulatory framework to be anchored to the concept of unilateral control rather than broad, vague definitions of financial activity. The advocacy group urges that the only way to effectively regulate DeFi without stifling innovation is to focus on who actually essentially has the power to move or manage assets. The group suggests that the person or the entity should be the only subject to financial regulations if they have the unilateral power to control, transfer, or depose essentially of users' digital assets. The DeFi distinction, the definition essentially is crucial for decentralized protocols. If a protocol is truly decentralized, meaning no single developer or entity has the admin keys to user funds, the group argues that it should not be treated as a traditional financial intermediary like a bank or a centralized exchange. In other words, if you are somebody that holds a cold storage wallet, you shouldn't be treated as a bank, because that just makes zero sense. Avoiding developer liability. The group warned that the FCA that holding software developers liable for how many people use open source permissionless code would drive most innovative essentially projects out of the UK and into the UAE. I'll be very honest, that's happening quite often around the world. Every time any country decides to stifle innovation when it comes to technology, whereas be essentially blockchain or AI or any other essentially part of the tech sector, everybody keeps on moving to the UAE. Because in the UAE, they don't stifle innovation, they welcome innovation, they fund innovation, they create rules that govern around innovation rather than to try to stifle it. Everybody in the US pretty much left a long time ago to go to the UAE because they care about innovation. Everybody in the UK is leaving also to go to the UAE. That's just happening. Even in the EU, people started moving away into the UAE. It's like the West is on purpose trying to ruin their own economy. Now, they were doing that on the Biden's administration, and Trump came along and stopped that from happening. But for some odd reason, they're still trying to stifle innovation, especially in the UK. They definitely are. I mean, the UK is well known to be the capital, essentially, of money. You know, London, City of London is the capital of money. Washington, D.C., capital of politics. Vatican, capital of religion. That's just how the world has been operating. And for some odd reason, they're just trying to stifle innovation. Do you know how many businesses have left the United Kingdom and just went overseas to the UAE? And some people will say, well, they are traitors because they didn't want to pay taxes. Would you want to be paying those ridiculous taxes if you owned a $1 million company? Hell no. This push for a controlled based regulatory model comes at a pivotal moment in the 2026 markets. The BlackRock president essentially, with BlackRock's recently listed on Build Fund on Uniswap, the industry is eager to prove that regulated assets can safely exist on permissionless infrastructures. The unilateral control standard would help define where BlackRock's essential responsibility ends with the protocol's autonomous code begins. The UK is trying to find a way to stifle anybody, a developer who creates anything on the blockchain that's public use, which means anybody can use the source code and do whatever they want with it. The person that originally created the source code could be liable for whoever uses their platform for anything negative, which is stupid to begin with. Absolutely stupid to begin with. Nobody should be liable for somebody else's actions in general when it comes to anything. The utility era versus the regulation era. As Joe Lubin and the other essential leaders argue that DeFi is as safe as TradeFi, they are pushing for laws that recognize the security inherent in code as essentially law. Transatlantic essentially influence by engaging with the UK's Financial Conduct Authority, the US advocacy groups are essentially attempting to create a global standard that could eventually influence the US Clarity Act and the ongoing debate over the FIT 21 bill in the Senate. Why does this matter in the UK? The UK is currently in high stakes race to maintain London's status as the global financial capital. Recently, which was essentially yesterday, London essentially, the Financial Conduct Authority did choose HSBC for their digital gilts, which was the first step the UK has ever taken inside the digital space since making those speeches of we will become the capital of technology. Since that speech, we haven't seen any movements. We've seen announcements, but no movements on paper. And the only one that we did have was yesterday regarding HSBC and their gilt essentially project. But here's the thing. What Biden did and his administration of circus freaks, stifling innovation inside the United States when it came to the crypto space, is exactly what's happening in the UK. I'll be very honest, the way the UK is going, I'll give it 10 years before everybody starts to exit. And the only people that will be living in the UK are people who were not British citizens, will just be all new people. The country is absolutely going to SHIT, pretty much, in every aspect. The way things are going in the UK, it's not looking good. But everywhere else, even though Americans essentially are headbutting each other, Republicans and Democrats are going against each other for certain bills inside the crypto space, going back and forward on the yield war scenarios with banks and CEOs, or the Clarity Act, or the FIT 21 Act, or so on. At least they're having discussions, at least they're having conversations with each other, sitting at the same table, and so on. Whereas the UK, we don't know what table they're sitting at. Now, the White House is what we're going to talk about next on tonight's live. The White House statement of trillions in institutional capital will be essentially waiting for crypto to unlock. Patrick Witt, the executive director of the President's Council of Advisories on Digital Assets, revealed during a Yahoo Finance interview that trillions of dollars in institutional capital are currently sitting on the sidelines waiting for a clearer regulatory signal to enter the digital asset markets. The Clarity Act, as the master key, we've emphasized essentially that the passage of the Clarity Act and the broader crypto market structure bill is the essential unlock for these massive capital pools. The legislative hurdles while parts of the bill regarding the CFTC have essentially cleared the committee, sections involving the SEC remain in the Senate Banking Committee. A markup essentially session originally scheduled for January was postponed, but Witt noted that regulatory clarity is the primary goal to move essentially these trillions onshore. The role of essentially of the compromise, the White House is actively essentially serving as a referee between conflicting stakeholders. Witt especially mentioned that the administration is hosting meetings to find a middle ground, essentially, on continuous issues like stablecoin yields and the risk of deposit flights from traditional banks. That's what's happening in the US. Conversations on the same table, whereas the UK, nobody knows what's happening in the UK. Not just from the crypto aspect, from every aspect, nobody knows what's happening in the UK. Beyond private investments, WIT provided essentially updates on the US government's own massive, essentially digital asset holdings. Following the 2025 executive order, the government halted the uncontrolled liquidations of seized Bitcoin. WIT stated this move alone prevented potential losses that could have reached tens of billions of dollars. Proper accumulating. The administration is currently working to essentially centralize oversight and ensure a rigorous accounting of all government wallets holding essentially Bitcoin and other digital assets. Expanding reserves. Witt comments essentially suggest that the administration is exploring ways to not only manage but potentially increase the government's holdings, aligning with the strict sovereign essentially Bitcoin reserves and narratives championed by figures like Senator Cynthia Luminous. The statement underscores the White House's view of crypto as a national strict priority, rather than just a financial trend. Global competition. The urgency to reassure essentially that these operations comes as other nations, such as Brazil, which has reintroduced a bill for the 1 million Bitcoin reserves, move to integrate Bitcoin into national balance sheets. The $20 trillion goal, which mentions of the trillions waiting fits into the broader Trump administration narrative of securing record breaking investments and commitments recently touted at the Davos essentially event as reached essentially towards 18 to 20 trillion dollars across all sectors. Next week, the White House will host a high stakes meeting especially focused on stablecoin yields, with banks representing attending essentially for the first time. This meeting is expected to be the final red line. Negotiation before new drafts of market structures bill essentially is presented in March. As Standard Chartered and JP Morgan continue to monitor the market's calm before the storm, Witt's message remains clear. The US intends to be the global capital of crypto by providing essentially the legal framework necessary to deploy the trillions currently held in reserves. This interview with Patrick Witt provides direct insights into the administration's aggressive timeline for crypto legislations and why they believe institutional capital is the next major market driver. So, next week, we're going to be having a very high stakes sit down, essentially, crypto CEOs, banks, and it's going to be the last time they sit together and come up with a solution that could be presented in March. So, are we going to be getting our Clarity Act in March? Could be, by the looks of it. And if we do get the Clarity Act, what happens next? As I said previously, two outcomes for outcome number, and they both have the exact same ending. The beginning is a bit different than the two outcomes. Outcome number one, we will get essentially the Clarity Act within weeks. The market will react in a positive way due to hype and then slow down. And then within weeks and months, we'll see that climb momentum on the upside with projects that actually have utility and that weren't bluffing for all these years. Outcome number two, we'll get a Clarity Act, the market will go down. The crypto market space will react in a negative way. People will be shocked, people will be frustrated, people will be angry, people will say, everybody said the Clarity Act will boost the market and it didn't. And people will start to panic sell and panic fear and so on. And then within weeks and months, the markets will pick up and go towards utility. Both have the exact same outcome, just a bit different on how they start off. Now, what we're going to be talking about next is Wall Street, Goldman Sachs, and BlackRock, and Citi, and everybody else. Before we talk about that, let's go inside the comment section first. This was happening there, and then we go straight into the next news. As I said previously, this is live, which means if you do have any questions, go for inside the comment section. So let's see where we're at. Inside the comment section, we're here. Hi, Miles and CMF family. Let's go for facts news. Hope you are doing well, guys. Happy to be in this live show. Let's go, Carl. Even Miles and CMF, are you looking forward to the weekend? Yes, I'll be honest. Um, Hello, Miles and CMF. Good to see you as well. How you doing, Manny? How you been? Miles, the banks will join the fintech companies after they put up a fight and have lost. I agree. They're not going to be easy on it. And I did write an article about it. And if anybody still hasn't seen it or doesn't know, on Substacks, I write articles. And my second article essentially was released today. I started yesterday. That was my first article, second article today. Um, if you haven't seen it, go and check it out. I don't write just a normal article that you would see air on a daily basis. I essentially share you the news and then I give you my perspective under it. So I'm trying this unique concept that nobody's ever done before, which is I'll share you the news and then underneath it, I'll give you my perspective of what it actually means by connecting dots and essentially lines for you. And it's actually pinned on my X profile. If anybody hasn't checked it out, my second article, edition number 002. If you want to go and check it out, it's completely free to go check it out. Miles, let's go. Brad House is like a pit bull when he goes after something he usually gets. I agree, 100%. Utility needs rules and regulations. Let's go in. Miles Under will work with Chainlink. What do you think about it? Today, Ondo is worth 0.25. This crypto increases his price of 4.5 in 24 hours. Ondo and Chainlink went together, working together. Great. Why not? Ondo is a brilliant project, as I said in the past. And when it was first essentially released, I talked about Ondo. Still stand by it. Incredible project in the tokenization sector, no doubt about it. They have many partners inside the crypto space. Ripple is one of their partners. There's the XRP Ledger, Chainlink now, Solana, Ethereum, and the list goes on. Great project. What do I think about it? Regarding Chainlink and Ondo, great. Why not? Brad always has a seat at the table. He does. He definitely does. What are Miles and CMF? Happy Friday, Ray. Good to see you. How you doing, brother? How you been? Now, Wall Street. If there are people out there that think maybe the institutions are moving too slow when it comes to the crypto space, or that, essentially, they don't care that much about the crypto space still because we don't have regulations or so on, and many other factors in play that you might be thinking to yourself that institutions are not moving as a speed they should be moving. Well, you might be wrong because the news just came out today that Wall Street is hiring incredibly fast when it comes to people who understand blockchain. And who are the companies that are hiring these people? BlackRock, Goldman Sachs, and Citi. They are all hunting for crypto talent right now. So why would BlackRock, Goldman Sachs, and Citibank right now be hiring for talent inside the crypto space? Well, so let me just show you this first, and I'll tell you why. News reported essentially that significant essentially surge in recruitment efforts from major Wall Street players for digital asset and crypto focused roles. Despite a market that has seen essentially $2 trillion essentially drawdown since late 2025, firms like BlackRock, Goldman Sachs, and Citigroup and Morgan Stanley are aggressively sourcing talent to lead their next phase of blockchain integration. Remember when I was saying if you can't beat them, join them? That's exactly what's happening with the institutional sector. These same institutions that a long time ago would have criticized the crypto space and said it's the Wild West, crypto is only for criminals. Remember what BlackRock CEO was saying for the longest time? Are the exact same companies right now who are hiring rapidly quick for crypto talent. Morgan Stanley, BlackRock, Goldman Sachs, Citigroup. So, despite a market essentially that has seen a downfall, these companies are still hiring rapidly fast and aggressively sourcing talent to lead their next phase of blockchain integration. Institutional integration. Recruiter Sam essentially Wellish, the founder of Working Crypto, noted that TraderFi CEOs are no longer viewing crypto as a separate entity, but are working essentially to fully integrate digital assets into existing financial systems. Targeting profiles, the 2026 hiring wave is focused on digital asset leaders who can navigate the intersections of capital markets, technical breakdown architecture, and regulations. The Zero and DeFi influence. The recruitment pushes follows high profile moves such as BlackRock's purchase of Uniswap governance tokens and its move to build shares essentially tradable on chain. Goldman Sachs also recently disclosed $2.3 billion in crypto related holdings, which I shared on this live show. Political catalyst. The Trump administration's pro crypto policies and promises of the capital of crypto in the world has essentially pushed these companies to start looking for more talent as well. So, why does this matter in 2026? This hiring spree essentially serves as the major vote of confidence, which this year is to be known as the utility era. While retail sentiment may be dampened by Bitcoin's recent dip, the smart money is building the human infrastructure required to handle the $2 trillion institutional unlock expected this year. The move also aligns with the UK's digital gilt pilot, with the HSBC and Franklin Templeton's view that the future of banking is natively on chain. By hiring now, Wall Street giants are ensuring they have the expertise to manage a financial system where the settlement is 24/7 and asset management is governed by essentially smart contracts. The report also mentions that many of these newly recruited digital assets and heads are expected to attend the World Liberty Forum next week, a major crypto event organized by the Trump family. This highlights essentially growing synergy between Wall Street's human capital and Washington political support, signaling that the hollowed out middle office of traditional banking is being replaced by a generation of on chain specialists. So, even if the banks want to take their time and cling on to the good old days, seems like the institutions don't. They're hiring at a rapid pace right now for the crypto sector. Anybody that can understand cryptocurrencies is pretty much being picked up by Goldman Sachs, Morgan Stanley, BlackRock, Citi, and the list goes on. Honestly, if you thought to yourself, the institutions are taking too much time, the Clarity Act is taking too much time, and it is, up to a certain extent, definitely is. Because we should have had the Clarity Act, but we had a government shutdown for 45 days instead last year. But if you're thinking to yourself that, everything is moving too slow, I wanted to move faster, what is actually happening? Well, behind the sidelines, a lot of things are happening. As I always review on this live show, what's happening behind the scenes. And that these behemoths are not waiting around for the banks and the CEOs to stop headbutting each other on the crypto regulations. They're hiring left, right, and center. These behemoths are preparing themselves for the future of blockchain. Because you can't fight it anymore. And you can't laugh at blockchain anymore. Now it's, if you can't beat them, join them. That's exactly what BlackRock, Morgan Stanley, Goldman Sachs, JP Morgan, Citigroup are doing right now. If you can't beat them, join them. They are definitely joining the crypto space. Now, Ripple's CEO is what we're going to talk about next on tonight's live. And it's regarding the CFTC, essentially advisory board. Ripple CEO, essentially Brad Garlinghouse, joins the CFTC Innovation Committee. If you heard about this news, essentially, if you have heard about it, if you haven't heard about it, I'm about to tell you essentially what could possibly play out with Ripple's CEO being on this board. CoinPeter essentially reported that Ripple's CEO Brad Garlinghouse has officially appointed to the Commodities Futures Trading Commission (CFTC) Technology Advisory Committee (TAC). This high-profile appointment, essentially appointee to the subcommittee on digital assets and blockchain technology, marks a significant shift in Ripple's relationship with the U.S. regulators that carries major implications in the future of XRP. You could definitely tell that when this news came out, Gary Gensler did not sleep well. From the definite essentially to advisors, the move is seen as a validation milestone for Ripple. After years of legal battling essentially with the SEC, Brad Garlinghouse's role at the CFTC signals that the agency views Ripple as a critical stakeholder in the utility era. Any crypto CEO that has just been chosen to be a part of the CFTC advisory group, then those CEOs and their companies and their blockchains are a part of the utility era. Another blow to the people who hate the XRP ledger or Ripple as a company, to all those crypto influencers. Just another blow. Shaping market structure. Brad Gerlinghouse will be in direct position to advise on the implementation of the FIT21 Act and the Clarity Act. His influence is expected to focus on ensuring that cross-border payment protocols and stablecoins like RLUSD have a very clear non-security path for institutional adoption. The looming SEC defeat. The appointment essentially coincides with the SEC chair Gary Gensler's recent administration of danger of defeat in the courts. Analysts suggest that CFTC is moving quickly to assert its jurisdiction over the digital asset space, while the SEC enforcement heavy approach loses steam. Institutional credibility. With Aviva investors tokenizing on the XRP ledger and HSBC piloting digital bonds for the United Kingdom, both of them Ripple partners, pressure the CFTC provides, and the seal of approval that could accelerate the $2 trillion. It seems like the only reason the market space is trying to move faster, the only reason that these behemoths are right now hiring crypto talent, the only reason that everything genuinely is pointing towards the crypto sector is because the market space is about to open its gates to a flood of liquidity, an absolute flood of liquidity. So, what does this mean for XRP? Regulatory moot. XRP is already the only digital asset in the world with essentially a unique court-ordered legal clarity in the US. Brad Garlinghouse's advisory role strengthens the narrative that XRP is the all-compliant, essentially, rail for global financial systems. Potential for a reserve asset. Following Mark's perspective, which I shared yesterday, comments that XRP could be ordered to be used for the national banking. This CFTC role places Ripple at the heart of conversations regarding the US digital asset strategy and the potential for a strict Bitcoin and crypto reserve. XRP ETF momentum. Market analysts believe that this appointment removes one of the final reputational hurdles for the approval of spot XRP ETFs, as it demonstrates Ripple's alignment with federal oversight. The news broke during a week of intense pro-crypto movements in Washington. The White House Yield Summit is scheduled for next week to settle, as we talked about it as well. The Fair Share PAC political, essentially, seminars that are the political, essentially, dropout situations that are happening right now, and the JP Morgan and BlackRock, essentially, continuing to deepen their on-chain footprints and treating the XRP ledger as a viable institutional alternative. For the XRP army, the broader market, Brad Garlinghouse's seat at the CFTC table, is being viewed as the beginning of the normalization era, where crypto leaders are no longer outsiders but architects of the new $150 trillion global financial plumbing. So, if you are a bit sad or a bit upset or a bit frustrated that the market space is not moving at the speed you thought it would be moving right now, because we did have quite a lot of hurdles to go through, but rest assured, there's tremendous work happening on the sidelines. Tremendous work that's happening on the sidelines. And when you have companies like BlackRock, Goldman Sachs, Morgan Stanley, JP Morgan, essentially hiring, Citigroup hiring at a rapid pace inside the crypto sector, it just shows you what's about to happen next. And when you have Brad and Brian Armstrong also join the CFTC Board of Advisories, it tells you what's going to happen next, which is the utility era. What is genuinely happening this year? It's all about utility, because it just keep on being mentioned by every crypto CEO. Is being mentioned by behemoths inside the financial sector. It's being mentioned that this is the year of utility and regulations. On that note, we have come to the endings of tonight's live. And we're finished for the first time ever on the dot at 11. This was the CMF live show. Stands for Crypto Mars Family. My name is Miles. You can tune to this live show Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. This was episode 441 of the CMF live show. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. We have also reached the end of the week, which means the next episode of the CMF live show, episode 442, will be Monday, as usual, Monday to Friday, 10 p.m. London time onwards. for anybody that wants to tune into these live shows. And if you have or haven't, essentially, if you have liked this live show by clicking on the three dots and clicking share to profile, thank you so much to every single one of you that has done that, CMF members. And if you still haven't checked out my Substacks, go and check them out. I will be sharing you news that I don't share on this live show, you could say, and give you my perspective on that news on Substacks. So if you haven't already, go and check it out. I've pinned my Substacks essentially on X. I've released my second article on Substacks. I'll be releasing one article per day, essentially, on the news, essentially what I think you should know about, and sharing you my perspective of connecting the dots together. So go and check it out if you already haven't, CMF members, or even if you're new, you're watching this for the first time. It's pinned to my X profile. Go check it out. Before we do go, obviously, let's go inside the comment section. Let's see what's happening there, and then we'll call it a night. I remember. Okay, now here we go. I was glad you're having a Saturday, Sunday off nowadays. You really were pushing yourself for all of us. I'm grateful for all you do, brother. Thank you so much, Ian, for the kind words. And I really was. When we see Boron, I may, you could say, yeah. I remember someday I asked you on the live about 2 years ago about what's good profession to get into, and you said blockchain is the future. I can't remember who it was, but look where we are now. Facts. Absolute facts. Miles, any news on SHX? No news so far. I'm going to be able to retire this year then, Miles. Let's go T. Brad G is a bad boy. Ripple is lucky to have him in their corner. His mindset and XRP's utility to the moon. Let's go. As always, Miles, a great program. Let's go, Scott. Will this utility run go on for 2 years to come, Miles? Looks like it. Thanks, Miles. Have a great weekend. Let's go, commenters. See you on Monday, same time as usual. Miles, we need more. Keep going. Funky, we have reached the endings of tonight's live show because there wasn't that much news. There was a lot of news to share, but I only wanted to share you what you should know about. There's a lot of noise. And what I typically do when there's a lot of noise, I essentially pick what you should know about and then leave the noise where it is. So that's all you needed to know about, I'll be honest. The rest was noise inside the crypto sector. Everyone, good night and have a wonderful weekend. I look forward and prayerfully seeing you on Monday at episode 442 Family Reunion. Let's go. Went so fast today. Night, Miles and family. Susie, see you on Monday, same time as usual as well. Good night, Miles and family. Great live. Many thanks. See you on Monday. Let's go, Ian. See you on Monday, same time as usual. Good night, Miles and all Sienna. Thank you for a great live and news. Have a great weekend. Let's go, JP. See you on Monday, same time as usual. Thanks, Miles. Good night, brother, and have a great weekend. See you on Monday. Let's go, T. See you on Monday, same time as usual. These Substacks are awesome. Thanks, Miles. Let's go, Scott. Thank you so much. Good night, Miles, and see you later, Alligator. Let's go, Funky. See you on Monday, same time as usual, brother. Have a great weekend as well. Night Mouse and CMF. Hope you all have a brilliant weekend. Let's go, Joe. See you on Monday, same time as usual. Thanks, Mouse, and see you next week. In the meantime, have a great weekend, my friend. Let's go, Carl. See you on Monday, same time as usual as well. Have a great weekend as well. Thanks, Miles. Good night, all. Have a great weekend. Let's go, Stormy. See you on Monday, same time as usual. Have a great weekend. Outstanding. Take care, Miles, and CMF. Have a great weekend. Let's go, Ray. See you on Monday, same time as usual. See you on Monday night. Let's go, Funky. I appreciate all you do. Thank you so much. Let's go, Peg. Thanks for the kind words, and see you on Monday, same time as usual. I would like to wish everyone a wonderful weekend, and I look forward to seeing everyone on Monday at the Family Reunion 442 episode. Let's go. Have a great weekend. Enjoy the break. Happy Valentine's Day, Miles and CMF. Let's go, Shelly. Thank you so much. Happy Valentine's Day to you as well. And happy Valentine's Day to everybody watching right now. And see you on Monday, same time as usual. I have now to start from the beginning again. Let's go, Funky. Share the live, make a comment outside the live. Thank you. Bows. Good night, all. Lena. Let's go. See you on Monday, same time as usual. Have a great weekend as well. I will see everybody on Monday, same time as usual, for episode 442 of the CMF Live Show. Click the three buttons to share the live show to your profile right now, CMF members. If you haven't, if you have, thank you so much. You're watching us on YouTube. Thanks so much for the like. If you haven't, like, subscribe, follow, retweet, and also check out my Substacks. See you every Monday. Have a great weekend, CMF members. Love you all. See you on Monday, same time as usual.